Okay, next topic is we're going to discuss business structures and how to properly set yourself up for success. So there's different ways that you can structure your business. So can you kind of touch on that, on the different ways that you can structure it from an IRS accounting standpoint?
Sure. So the first most common method is going to be a single member LLC, which technically when you register an LLC, you can be taxed only on your individual tax returns. You don't need a separate business tax return. From there, you can elect to be taxed as an S corporation, which is only a tax status. It's not a legal status. So you can't go and register your business with the Secretary of State as an S corporation. It's actually a tax election with the IRS. You also can have a partnership or a multi-member LLC. And anytime there is a partner or another member in the LLC, it's reported on a Form 1065, which is a separate business tax return. With a single member LLC, again, just your individual tax return. The other entity types require a separate business tax return.
Okay, so like I said, I'm bringing lots of value. And so that's probably over a lot of our heads, including mine. So let's break it down. Let's use an example. If I am opening up a body shop, how do you suggest I set that up?
From a tax perspective, and more importantly, a legal perspective, I would recommend doing a single member LLC. That way you have a separate business entity from you as an individual to help maintain separate business assets from your personal assets.
Okay. And then where does like a K-1 factor into this?
It actually wouldn't be factored into that unless you would elect to be taxed as an S corporation. So you could file only on your individual return, Schedule C income. So then it's self-employed income in the tax world, even though all of it is self-employed in your world.
So maybe when you're starting out small, you start with the LLC, and then maybe as you get to be a larger company, that's when you would recommend going into the S Corp side?
Yeah, that's actually a really good question, and one I'm really glad you asked, because I commonly see people elect to be taxed as an S Corp too soon. So it's definitely an objective analysis that's easily run that you would want to do before electing to be taxed as the S Corp. Because once you elect the S Corp status, you're an S Corp moving forward. You can't bounce back and forth, but you could set up an LLC today, operate the LLC for years, and then when the S Corp makes sense, do that election, and then you're an S Corp moving forward.
So that brings us to our next thing. So when you're setting up the LLC, like she had mentioned with the Secretary of State, that's where it's important for us. If you have a new business, we do need 2 years of that business filed tax returns for traditional financing. So like traditional financing, don't come at me with, oh, I can do this. Yes, there's other options, but we're just going to talk traditional for right now because that's going to be your lower down payment, your lower interest rate, things like that. So we need to have 2 years of filed business returns, no matter what you elect business type. But if you have registered that business with the Secretary of State, like the LLC, for at least 5 years, then we can use your last tax year that you have filed. So that could really benefit you if you've had that business for 5 years and maybe 1 year you had kind of a slow year, but then you had a really good year after that. I don't have to average the two. I can just use that 1 year. So it kind of simplifies things, and it can really benefit you on qualifications for the lending side.
Yeah, and that's a good point too, because I commonly get new business owners who haven't done the Secretary of State registration because you don't have to. If you're filing on your individual tax return, it's considered a sole proprietorship, which means you and your business are one and the same. There's no separate registration requirement. There's no EIN requirement. However, you cannot elect to be taxed as an S corporation from a sole proprietorship. So I always tell people to register the single member LLC at a minimum because it doesn't complicate your tax filing. But that way you are able to elect S Corp status. You have more of that liability protection by virtue of having that separate business entity. And then it would be equally or, additionally beneficial with the lending side.
Yeah, I love that. Let's back up for 1 second because, again, I think a lot of this is going to be new to people. So what exactly is an EIN?
An EIN is an employer identification number, which is the equivalent of a social security number for a business. And that's actually another interesting thing that I just tell all of my clients, and I just want people to know. You can file your business with the Secretary of State directly and pay $50 to do it. It's very basic information, and you do not need to pay a separate filing service to do it for you. You don't have to have an attorney do it for you either. Although you can in some circumstances, if you have a business partner or something and you want an operating agreement, it might make sense to get an attorney involved in that. And then the second step is to get the EIN for the business. You can actually apply for the EIN directly through the IRS website, and that's free to do. So it's not uncommon for me to get new clients that have set up a new business and they've paid upwards of $200 to have somebody register this for them when they could just pay $50 to register their LLC with the Secretary of State. So definitely something easy to do, simple to do. You don't need somebody to help you with it. You can do it on your own.
Well, and that's where it's just so important for business planning. Like, I think a lot of people either they overthink it, so it slows them down from starting the business, or they don't set it up properly and then they run into tax implications, or on the lending side, they run into issues because they didn't properly plan. So make sure that you're really taking notes on this stuff and that you're properly planning for your future, for your business. And of course, I'm talking about the real estate side because that's important to get you into home ownership. So just make sure you're structuring things properly to keep yourself compliant, keep yourself safe, but more importantly, to keep everything lucrative, right? So we want to take advantage of all the tax benefits, but we also want to be able to qualify to purchase a home, and that'll be our next topic.